Mr. Rajnish Kataria to share his views.
Respected Mr. Rajnish, Director of the Pune Institute of Management, Mr. Praveen, Dr. Amit Baga, Dr. Anurag Singh, Mr. Vijay Kaushik, Rajan sir, sitting here. I'm sorry I don't know the names of the debating members. Yes, participating students. It's always a pleasure to come to Jaipur. I'm not a regular speaker actually, and they make me do a lot of work every time they invite me. So whatever views I have of the topic, whatever we have been able to gather in all these years, by virtue of being a banker, plus by virtue of being in the training field, we share it. I'm going to be having the points, and let it be, I'm going to be sharing the points with you. There's not going to be any PPT for the students who are sitting there. I request that you please note down the points. It will help you in your interviews, in your references. The role is the changing role, the topic is the changing role of financial intermediaries. Now it's been explained very well by Praveen and Dr. Amit Baga of what is the financial intermediary. As far as Indian financial system is concerned, the banks dominate the financial system. The banks, all bank shares at 63% of the total assets of the financial system. 63% of the assets of the financial system are controlled by the banks. Insurance companies, they control 19%. Non-banking financial institutions control 8%. Mutual funds control 6%. Provident and pension funds, they control 4%. You had a lot of changes in the banking system. Earlier it used to be regulated banking. From 1991 onwards, we had the opening up of the economy. We had the Narasimhan Committee recommendations, which were given in the year 1991 and 1998. Private sector banks were given permission to open branches. The foreign banks were given permission to open branches in the regulated manner. So all said and done, there was a role change in the financial intermediation system in the banking industry. The role change was, the biggest role change was, as the time is progressing, is the increase in the competition. When I was the branch head in a nationalized bank, I used to press the bell and the PM used to come and tell me, what can I do, sir? And I used to tell him, you call this customer who's waiting for me. Now in a bank like HDFC Bank, the branch manager is not allowed to sit in the cave. He is only supposed to be doing his work, operational work, and after that he is supposed to be outside or in the banking arena, be after or managing the customers. Any of the students, if you wish to talk amongst yourselves, you are most welcome. You please ask me any question in between, I'll answer you. But please, let's be serious in this celebration. Now, PSU banks, they control about 83% of commercial banking. They have a total of about 67,000 branches. Private sector banks, they control about 16.6%. And they have about 13,500 branches. And foreign banks, they contribute only 0.4%, and they have about 325 branches. The total bank credit as of September 4, 2014 was 61.40 crore rupees. Deposits grew by 81.32 crores during this period. 61.40 lakh crores, and deposits were 81.32 lakh crores. So that is the scale of the control of the banks. There are certain parameters which I am going to be touching as far as financial intermediation is concerned. Number one is the area of credit. What is credit? Credit means the bank is giving loan to corporates, to individuals, to entities, to public limited companies, to private limited companies, to firms. It is giving retail loans also for development of retail, for the purchase of retail assets, etc. There are two main patterns in credit which have undertaken a major change. One is the interest rates, and second is the tenor. The interest rates used to be regulated earlier, and now there is almost a deregulation of the interest rates. Every bank is quoting its own interest rate for credit, and it's basically based on the base rate which the bank is supposed to have. A bank like State Bank of India is having a base rate of 9.5%. A bank like Oriental Bank of Commerce is having a base rate of 10.25%. So there is so much of difference. The banks have been given the leverage to fix the base rate, and based on that base rate, they are supposed to be fixing up the rates on which they are going to be affording credit to different categories of lenders, to borrowers. Now, after liberalization, the corporates especially can access funds at a much cheaper rate. You have the facility of an external commercial borrowing. You have the facility of trade credits, that is for imports, and for exports you have the financing which is denominated in foreign currency. The difference between these two, as is clear, the changing the role of banks and the demand on the banks, is the difference in the rate of interest. If you go to a bank and ask for a normal loan or borrowing, if you calculate at 9.5%, they'll load their margin of about 3 to 4%, and they'll give you the funding. Yes, ma'am. Any problem? Please come in. Yes, right. Please. As far as lending in borrowing in foreign currency is concerned, when it is denominated in foreign currency, you can have borrowings even at the rate which is very, very low, because that borrowing is dependent upon what is known as LIBOR. What is LIBOR? London Interbank Offered Rate. And what is the rate of LIBOR for different currencies as on today? For periods ranging from 1 month up to 12 months, for different periods, the LIBOR ranges from 0.10% to 0.5%. That means if you wish to take a loan in London, you can take a loan at 0.5% plus whatever margin they may add, which comes to about 1% or 1.5%. If you wish to take a loan here, you have to be taking the loan at the base rate plus the margin, which is about 10.5%. So there is a whole lot of difference between the loan being denominated in foreign currency and the loan being taken in rupees. This is one of the very big changes which has taken place in the banking system, that it has been able to offer credit at these cheaper rates in keeping with the international market scenario. Now then you have the lines of credit which are being offered to the banks, by the banks to certain entity. Amongst the banks also, ICICI Bank, Deutsche Bank raised funding for ICICI Bank for about $1.5 million. These are done at very, very cheap rates. There is supply chain financing in credit, that is providing credit to vendors, to original equipment manufacturers, and downstream traders. The main challenges which the banks are facing is uncovering the window dressing in the banks through clever financial maneuvering, for which we require the services of financial experts like chartered accountants. And then we have what is known as the willful defaulter. There has been a lot of discussion about the willful defaulter. I don't know how a defaulter can be willful. What is willful? If you see the break, the will and the full, the person is having full will to do something what is wrong. So it is a willful defaulter. Willful defaulter is one who has the funds, who is diverting the funds, is not ready to pay whatever advances is taken from the bank in a timely manner. There is siphoning of the funds. There is management disputes. All these are challenges which the banks are facing as far as credit is concerned. I'll talk about NPAs later on because NPAs are a very, very important component. Almost about 5% of the banking asset, banking loan, which has been given to different sectors and individuals is under stress, is NPA. And there are what is known as stressful assets, which means there is some sort of a restructuring which has been done in the original terms and conditions in order to suit the interest of the borrower. Now Reserve Bank has come very strongly on this as a part of the changing paradigm. Reserve Bank says that from 1st April 2015, these restructured assets, which are about more than 10% of the total advances given by the banking industry, will have to be declared as NPA. So the banks are going to be having a lot of challenges from 1st April 2015, especially when all this window dressing which earlier used to be done earlier will come in the open. Then you have certain non-funded incomes. One is the funded income, where directly the funds are involved. There are non-funded income where there is a contingent liability involved. That means the liability happens upon the happening of a particular event or a particular transaction. In that case, you have the bank guarantees in the LCs, which are traditional products. There also a lot of changes are taking place. Banks are offering to good customers, they are offering these products at certain margins which are quite low, at 10%, 20%, without taking commensurate securities, depending upon the strength of the customer. And loan against jewelry. McKinsey has said that the stock of private gold in the country is approximately 50% of the total FDRs of the banking system. So the loan against jewelry is one item which has become quite popular, especially in South India. That is gaining ground. Then you have the loans against ESOPs. These are all the new developments which have taken place, which were not there about 4 or 5 years back. And then the pledging the DMAT in order to take loans. Or as far as the corporates are concerned, you have the traditional products like term loans, working capital, raising capital by IPO, by debentures. And for current assets, you have the cash bank balance, you have the inventory financing, you have the raw material financing, you have the what is known as working capital financing, like cash credit, stocks. In exports, you have the packing credit, the pre-shipment credit, and the post-shipment credit. All these Earlier, up to 31st March 2014, export credit was given on certain discounted rates. That particular interest subvention, which was there up to 31st March 2014, has not been extended by Government of India. They are going to be taking a view along with this new import-export policy, which is going to be coming in a few days. Now, as far as the new products are concerned, you have what is known as the GDRs, which is the Global Depository Receipts. They are USD denominated, traded in US or Europe, which is issued by an Indian corporate. It helps in raising funds from the international market. They are freely tradable and can be cancelled anytime. GDR holders assume exchange risk and price fluctuations. It's not only in India that you can raise funds, you can raise the funds of your corporate outside India also. You have the American Depository Receipts. They are USD denominated, which are traded in US. It helps companies in raising funds from US. ICICI Bank, Satyam, Infosys, they have floated these American Depository Receipts. We have the Indian Depository Receipts. It's the Indian version of the ADR and the GDRs. It helps foreign companies to access Indian funds. We have the trade credits, which is the buyer's credit and the supplier's credit. Buyer's credit is given again at foreign currency denominated rates of LIBOR-based rates, which is again very competitive. The total costing for a buyer's credit comes to about, for a 6-month period or 1 year period, comes about 6 to 6.5%, as compared to a normal borrowing of 13 to 14%. You see, the asset quality is a big challenge in the banking industry. While we go forward, while we look into how the things are going to be shaping in future, as far as financial intermediaries are concerned, they have to really take care of the asset quality. There has been an increase of making loan provisions by 13% as compared to the previous year by banks. Loan provisioning has increased by a staggering 13%, which is a very alarming figure. The trend on year-to-year growth in gross NPAs. You know what is an NPA? When does an account become an NPA? After 90 days what? Any account which is opened in after 90 days will become NPA.
Or the principal is not paid within 90 days. After the 91st day, the amount will turn into.
Very good. So the trend of year-on-year growth in NPAs, gross NPAs, outstripped the year-on-year growth of advances. That means the total percentage of advances which were given in the banking industry were less as compared to the total percentage of NPAs which accrued in the previous financial year. Now this is a very challenging proposition. There are 5 subsectors which have affected, and the main factor which is causing problem for the banks is the infrastructure. In infrastructure, there has been certain areas which have been added. You have the power generation, you have the telecom, you have the roads, you have the ports, you have the airports, you have railways other than Indian Railway. Then you have iron and steel, you have textiles, you have mining, including coal, aviation services. So all these sectors, they contribute about 24% of the total NPAs of the banking system. Infrastructure has the highest share of 14.7% in the total advances of the banking industry. As far as the figures go, as on 31st March 2014, the stressed advances of PSU banks was 11.3% exact of the total advances. Old private sector banks 5.8%. And new private sector banks 1.4%. You see, then what is the difference? The public sector banks, why such high NPAs? Old private sector banks, why 5% NPAs? New private sector banks, why only 1.4% NPAs? That means there is some gap between the changes which were to be brought about in the operational system of disbursing credits, they are still following the old pattern of a branch head as far as the PSUs are concerned. The branch head of a bank, any bank, who is an AGM, has normally power of rupees 5 crores. He has the power of rupees 5 crores to give a loan for different categories, depending upon the categorization. Now what happens is, in a bank like ICICI Bank, HDFC Bank, or Axis Bank, the branch head has zero power. He does not have any power. What is he supposed to do? He is only supposed to do retail. But a branch head in a public sector organization, in a public sector bank, is supposed to do credit, he is supposed to do retail, he is supposed to do follow-up, he is supposed to monitor the payment of the interest, he is supposed to go to the courts for recovery of the amounts, he is supposed to handle his staff, he is supposed to handle the customers, and 10-15 more functions on a day. So I don't know, he has to be some direct agent of God like a Prime Minister to be working as an efficient branch head. As far as private sector banks are concerned, they have a linear system. Linear system is there is a credit wing which only handles credit. So the person from the credit wing will be sitting in the branch. He'll be taking the proposal, he'll be monitoring them. There is a person from treasury or foreign exchange who will be doing only foreign exchange. He'll be in touch with his product head. So this particular change needs to happen in such a robust financial intermediation as banks. This is the major change which is required at the earliest. This is already started in very small way by State Bank of India. They have the system of having the experts sitting in the branches who only look after a particular product. That too, and I think it's going to be growing with the other banks also. Now the next category of certain areas where there is a lot of growth required to be done and which are going to be a big challenge for the banks is the MSME sector. MSME sector is very, very important sector. There is a study by the PhD Chamber of Commerce, I was going through that. It says that there is costly credit which is given by the banks to the MSME. You know what is an MSME? Micro, small and medium enterprises, investment in plant and machinery, etc. You would know about that. There is insufficient collateral which can be offered by MSME clients. You have the poor documentation for delays in loan sanctions. There is lack of personal contact with the banks. There is non-acceptance of project proposals by the banks. There is bank perceives SME startup ventures to be high risk borrowers. Sanction of credit should normally be done on clean balance sheets and regular payment of taxes to government rather than availability of collateral. Now this is one change which needs to be brought about as far as the MSME lending is concerned. Of the registered MSME units, 29% are reported sick. On account of high NPAs, banks feel hesitant to finance this sector. Now this is going to be a big challenge in the days to come. The next challenge is infrastructure financing. You have infrastructure financing, which I have just given you a bit of points. The total projection for investment in the 12th plan in infrastructure is 55 lakh crores, in which the government will have to provide the bulk of the risk capital, whereas banks and capital markets will provide bulk of debt finance. If proper infrastructure financing was done, if proper road buildings, etc. were taking place, it would not take us about 30 minutes to 45 minutes each day from this UP gate to reach Sector 62 Noida. See in what shabby state of affairs the main arterial road is in. It's just because there has been diversion of funds for certain welfare schemes in order to take care of the needs of the voting, etc. And no funds have been utilized properly for infrastructure. And the banks play a very important role in this. As far as treasury is concerned, now all this banking, all your requirements are going to be slowly and slowly becoming integrated. The global economy never used to be integrated as it is now. FDI and FII have become the guiding principles. You have any remittance which is going to be coming in India has to be routed through the medium of a bank. All this is, there cannot be any investment in India which does not happen through the medium of a bank. There cannot be any investment which is going outside India which can happen without the medium of a bank in between. So banks have to play a very important role in that. I'll just take one case of HDFC Bank. That why is it that the bank has grown so much? It has recorded a growth of about 30% quarter-on-quarter basis. In the last 2-3 quarters, it has not been able to achieve that. Still, it is achieving about 25 to 26%. I always give this example because that's the way forward for the Indian banking industry. The secret is that the banking system's growth will be 3 to 3.2 times. Please note this. The growth of the banking system will be 3 to 3.2 times of GDP growth. And banks like HDFC Bank have grown 4 to 5% more than that. If your GDP growth right now is 4.6%, then the banking system's growth will be 3 to 3.9 times more than 4.6%. And banks like HDFC Bank, Axis Bank, ICICI Bank will grow about 4 to 5% more than that. The secret of HDFC Bank is the widest product range, and they have the brand which is widely acceptable in India. Almost half of the 3,200 branches of HDFC Bank is in semi-urban and rural areas. And you have a lot of work to be done as far as rural lending is concerned, rural accounts. Just now we had a scheme from the government of India that where so many accounts were opened in one day. I think how far that is going to be leading to the actual customers coming to the branch and operating those accounts, it remains to be seen. Now, lending in villages and small towns expanded by as much as 40% in the past 2 years in HDFC Bank. So the banks who are afraid of working in semi-urban and rural areas have to open their shutters and windows. And they have to go to the rural areas in order to expand in the years to come. There is of course technology, which is a very important factor. And in conclusion, I will say that there are some points which should be taken very, very seriously, which are the big challenges for the Indian financial intermediary as important as the bank. The Indian mortgages are likely to cross 40 lakh crores by 2020. All this financing is going to be done by the bank, so there is ample opportunity. The rapid accumulation of wealth in rich households will drive wealth management in the banks to more than 10 times. There will be demand for low-cost banking solutions. Branches and ATMs will grow at a rate of about 2 to 5 times respectively in the years to come. Mobile banking is already coming of age and slowly it is going to be expanding further. Banks have to adopt the customer relationship model. Not only the private sector banks, the public sector banks also have to raise their levels and rise to the occasion. Margins will see downward pressure both on retail and corporate banking. Now, for each and everything, the customer is negotiating. A customer who used to accept every pricing of the bank earlier is now sitting at the counter of the bank and telling them, no, I want this pricing, otherwise I'll go to another bank. These were the main points which I had as far as dealing with the banking system. It's a great career to go in for. A lot of challenges. The challenges are there. As far as honesty aspect is concerned, that is getting compromised. Let's be very clear about it. We talk about everything. We talk about how the banking is going to be shaping future. But as the needs and demands of the Indian population are increasing, so are the needs and demands of the bankers also. They feel that by taking shortcuts, I can tell you one thing, there cannot be an NPA if the banker is honest. If the banker is honest, he will see to it that he works properly on that proposal, loan proposal. NPA, they affect the local population also. NPA, they affect each and every person because that much of funds is taken away from the system, which otherwise would have been lent for certain productive purposes. This is a very big challenge, and going forward, I wish that there is better sense which prevails in the banks, especially the public sector banks, they have to come of age and adopt new systems and techniques in order that they are able to work efficiently and effectively, both economically and socially. And amongst all of you who are wishing to join or have any queries of any type, our institute is very near. You can contact Dr. Anurag Singh. Me and my faculty are always there to help you out for any interviews or anything which you may go in for, or any written tests, etc., which you have to appear for. We will help you out with each and everything with the books. I am ready to even issue books to you from my library, and for which I will request Dr. Anurag Singh to have some sort of a system so that the person, it's ensured that we get the books back. Thank you. All the best to all of you. I have great careers ahead, and don't have these murky faces, and be as enthusiastic as possible with a smile on your face. Sorry for being slightly, disciplined in the beginning, but one has to be slightly serious when one is doing some serious work. For the rest of the time, you can always do whatever you wish. Thank you, sir. Thank you.